Hello, my name is Rahim Lakhan. I'm excited to present on behalf of Lithoquest Resources. We are in Canada and Ontario. We are a gold-focused company in a Tier 1 jurisdiction. If there are a few things that I would like you to take away from today's short presentation is that our commitment to our shareholders is based on the ability to bring new technology to assets that were previously drilled in the 90s and up to 2005 in one of the best jurisdictions that hasn't gotten much attention since 30-odd years. So here's the value proposition that I'd like to point out. We're in search of a multi-million ounce gold deposit in a Tier 1 jurisdiction in northwest Ontario. You'll see from the map, we are between Red Lake and Timmins in an area that has not been bid up or hasn't seen a rush. So we're not looking at projects that are on Mayfair and Fifth Avenue. We're further out. And what's good to have noticed is after we have started working on this area, there has been a major move to stake claims around us. So watch this area carefully. We have an internationally recognized team, and I'm very proud to share that we have attracted best-in-class fund managers who have committed capital to the company early and wisely to help fund an upcoming drill program. We have in the company, as I mentioned, assets that have mineable widths and high-grade drills that were done by previous exploration companies in a jurisdiction that is well known. You may have heard of the Musselwhite mine, which today is owned by Newmont. It's 6+ million ounces, and what ties the rocks together is the banded iron formation. So we have two projects that are part of the same formation. We don't know how many ounces we have, but the rocks we're taking a look at have been revealing a lot, and our deliverable coming into January is to start drilling. So with that, I'm going to advance through here. Here's our capital structure, roughly 124 million shares out. Our 15-cent warrants, they're about 12 million. They'll expire, bringing the warrant count out. We did a financing back in May at 10 cents, and we attracted significant amount of new capital. Already in the company, you can see some names you may recognize. Previous shareholders that have remained steadfast to the company is Warren Irwin, who is a 9% holder, Rosso Capital, Eric Sprott personally, and the Medalist Capital Group out of Toronto. In this most recent round of financing, we passed around the hat for $900 million. I'm pleased to say it was well received. We went to 2.4 million. The shares came free trading on the 2nd of November. I'm also pleased to report the shares are pretty much in line with the issue price despite the volatility in the market. And lastly, I'd like to point out that management and advisors hold 10%. Bruce Counts, who could not be here for this presentation, himself as CEO owns 5% of the company, all paid up shares. I'm going to give you a quick look at our lineup for management and directors. On the technical team, I'd like to point out two names that you may be familiar with, Dr. Rob Carpenter and John Williamson from the Metals Group. And Rob Carpenter is personally invested in the company. He's invested in previous rounds. He does not take consulting fees from us. This is unusual, but it just goes to show you that the talent that is supporting the thesis of going into a project in a good jurisdiction that is gold, that is high grade, and applying modern science to de-risk it. Now, as you remember, Rob Carpenter would have been a founder at Kaminak, which was acquired for over 850 million Canadian by Goldcorp. And by the way, he has done his PhD at Meliadine, which is a banded iron formation. The address I mentioned, we're between Red Lake and Timmins on the greenstone belt. The red circle is where our three properties are. Look, this is a jurisdiction that you've heard a lot about today. You know the mineral endowment and the production that's come out of the greenstone belt. And at this time, we're targeting high-grade banded iron formation hosted gold deposits similar to what Musselwhite has. Miminiska is our first project. I should point out that it is the right geology. It's banded iron formation. There has been historical drilling, high grade. I'll show you those intercepts in a moment. And we have made a strategic acquisition. It's an option agreement to purchase 100% in the two most advanced projects in the belt. Miminiska is extensively drill confirmed, and there are gold showings. And the second project, which is 25 kilometers to the north, is Kisik, which has numerous drill confirmed gold occurrences. And we have a copper project that I won't go into today, which is 100% inside the company called Atwood. Here are the grades and the widths. What I want to point out to you is that very little work had historically been done on surface gold showings. Please observe the widths and the grades here. 2+ indicates on the meterage that these are mineable widths, and the grades do appear to be quite juicy. I will quickly move, in the interest of time, to the next project, which is Kisik. Mineable widths, higher grades, and as if you'd notice the red lines, these are the fold systems that we're seeing here. Very similar to what other banded iron formations have. There's a lot of low-hanging fruit here. This is what we're targeting in January and February. When we raise the capital, it's important for me to underscore, we asked 6 months to do a proper study where the company would, in Q2 and Q3 of this year, sit down, compile historical data, complete an airborne survey, conduct geological mapping, and collect soil samples. I'm pleased to share with you we're ahead of schedule on this, and the next major catalyst will be providing the market and our shareholders with a very clear drill plan. So watch for that next. And following that, we will be moving to rigs on site to get the truth machines there. If I just go back, we're obviously very understanding of ESG. One of the most important things about this slide is that regarding the First Nations, we only have one First Nations group. Our colleagues around us have multiple. So we have the ability to have dialogue one-on-one. It makes it simpler, and that's one of the benefits of the area we're in. Here is the acquisition terms I'll leave you with. Essentially, these properties were in a company that is known as Landor. It's a AIM-listed company based out of Australia. These were tertiary assets for them. We negotiated to pay a cash and share basis for just over $4 million over 2 years. And upon our election, we can give them shares as well. So if the stock price strengthens, we're able to issue shares and preserve what's in the treasury. And just to mention, Landor will retain a 2% net smelter royalty on both projects, which we can buy back 1% off the NSR by paying $1 million. That, my friends, is the story. I will end with this slide, which I'd like you to notice there are some major catalysts in the works, and watch for these milestones. Thank you very much for allowing me to speak at the one-to-one in London.